A $500 million climate bond oversubscribed by investors, a World Bank boost for Peru, and a U.S. policy reversal. Can new money really keep climate action on track?
Today is 2025, May 18th. So what's actually happening with climate finance this year? There's a lot of talk about a big U.S. pledge, but is that really the story?
Not quite. There's no new $500 million grant from the U.S. to a global climate fund. Instead, we're seeing three major $500 million moves, but each tells a different story. Let's start with the Climate Investment Fund's bond.
Right, the CIF Capital Markets Mechanism. In January, they launched their first ever $500 million bond, listed on the London Stock Exchange. It drew $3 billion in orders. Why does that matter?
It's a sign investors see climate finance as reliable. This isn't just government money. Private capital is flowing in. The bond's proceeds go straight to clean technology projects in developing countries.
That's a shift, isn't it? From grants to market-driven funding. But what about the World Bank's move?
In March, the World Bank approved $500 million for Peru. This isn't a global fund. It's highly targeted. The money is for climate adaptation and economic resilience, helping Peru deal with very specific climate threats.
So instead of broad global action, it's about local impact. Then there's philanthropy. Bloomberg Philanthropies and others are pooling $500 million for energy transitions in low and middle income countries, especially in Africa. How far does that go compared to government funds?
Philanthropy can move quickly and take risks, but it's not as predictable or large-scale as government funding. Still, it's filling gaps as government priorities shift. Which brings us to the U.S. What's happening with policy direction now?
The Biden-era increase in climate finance has reversed. The Trump administration, since January, has taken the opposite approach, expanding support for overseas fossil fuel projects and blocking climate funds, like the recent refusal to approve money for South Africa's energy transition.
And that has real consequences. Tracy Ledger from South Africa's Public Affairs Research Institute put it directly. A delay in funding means a delay in decarbonizing the South African power sector. If the U.S. steps back, do philanthropies or bond markets really fill the gap?
They try, but it's not one-to-one. Philanthropy and bonds have flexibility, but they don't have the political weight or scale of direct government action. Is that why international climate agreements feel so fragile?
Exactly. One administration change and funding commitments can disappear. So, while market and philanthropic initiatives are growing, they can't fully replace the consistency of government funding.
Stepping back, what do these 500 million stories mean for the big picture? Are we seeing progress or just patchwork solutions?
Both. There's real innovation, like the bond and new philanthropic coalitions, but also uncertainty. Political shifts can slow or stall major projects. The global climate response is more a mosaic than a single coordinated effort.
And the stakes are global: emissions, development, resilience. With every shift in funding or policy, billions of people are affected. So, are these new financial models enough? Or do we still need strong, predictable government cooperation?
That's the open question. For now, the world is improvising, funding climate action with whatever tools are available. How sustainable is that approach?
And what happens when the next big crisis hits? Will these mechanisms hold up? That's what we'll keep watching.
That's it for our deep dive. $500 million can mean very different things depending on who's giving, how, and why.
Thanks for listening. We've covered bonds, banks, philanthropy, and politics, each shaping the future of climate finance. Stay tuned as these stories evolve.